Good evening, Speaking Forex. This is Gregory here. It is currently 4:37 p.m. Pacific Standard Time, April 30th, 2012. And what I would like to talk to you today is about the US dollar. On my screen, I have the market analysis for the week of April 30th. We are bearish on the US dollar. Here are the fundamental reasons why. I'm not going to talk about them right now because, first of all, I don't want to make this video extremely long. But these are the reasons why we believe so. So you can just go to the website, you can click on market analysis, click on May, and you'll be able to find that information. You can do that at your own leisure. But what I like to talk about is the technical trade setup. So we're bearish on the US dollar, so we just don't sell. We need to actually quantify our entries and exits so we can mitigate our risk and maximize our reward. And that's the whole concept of plus EV trading. So you want to make sure that you're constantly putting yourself in profitable situations in the long run so you can consistently make money. So let's go to the technical setups. I'm going to bring up a few charts. Actually, just two charts, and that should be enough. And if you want to look at more, you can actually look at other charts at your own leisure and see if you can find similar profitable trading setups. That'll be a great exercise for you. So the first pair I like to speak of is the dollar Swiss. Okay, so once again, we are bearish on the dollar. So anything trading versus the dollar, we're actually bullish on the opposite pair. So currently at a little after 4:30 p.m. Pacific Standard Time, the market is trading at 90.72. Now, our move is to the downside, and so we need to find a way to enter the market and exit the market. So if you're into the market and you're already short, then you are in a good position, and here's why. If you pull up a daily chart, you see this purple line here. This purple line is very significant. Okay, it was previous demand that became support and did that 2 or 3 times. So these areas are extremely important as we play the each side. So you want to sell beneath the purple line and you want to buy above this purple line. As you can see on Friday, we closed beneath here with extreme significance with this reversal pin bearish bar. People call them different things, but basically it signifies the same thing. So when the market closed beneath here, we're looking for a retest of this area of the purple line. So if you go down to the 4-hour chart, as you can see, we have retested this area with extreme significance. We have a double top. Most professional traders are entering on the close of this bar at 90.80. More aggressive traders are actually entering on the touch of the purple line. So it doesn't matter what you do, as long as you have an overall trading plan and you quantify your risk and your reward, you should be fine, because different traders have different perspectives on the market. So if we're going to the downside, how do we quantify our risk? So at 90.80 is our entry area. The 9100 area should be our stop area. Anything above 9100, maybe like 9110 or something like that. And the reason why is because even numbers such as 9100, or let's say round numbers such as 9100, and half numbers such as 9150 are psychological support and resistance areas, or some people call them demand and supply areas. So naturally, it makes sense that if you're short and you have a stop, you want to put your stop above this area so that way it won't be hit. So if we quantify our risk at 25 pips, what's our reward? So we're going to target the 90.15 area, and here's why. As you can see, as market came down and tested this area around the end of March, we tested this area significantly about 4 or 5 times, and it held pretty well. So logic tells us is that once we hit this area again, market should hold again. So if we get in around this area and get out around 90.50, 90.15, that's about a 65 pip profit. So if you're risking 30 pips to make 60 pips, that's 2-to-1 reward to risk ratio. That is definitely a plus EV trade setup. So for the next trade setup, if we can break beneath this particular green line, we're going to target the next area at 89.40. The same scenario applies. We're not going to sell until we break this area with some type of significance, pull back a retest, and then we're going to retest this area again. And we're going to exit the market, and we're going to figure out exactly what we're going to do from that point. So basically, you want to play the levels between these different zones, and that's how you exploit the market for profits, because these areas are nothing but equilibrium points, and anything in between is nothing but noise. So our goal is to eliminate as much noise as possible and play the levels of supply and demand in order to get the most profit possible when we're making these trades. Now, the next pair I'm talking about is the Aussie dollar. This is a very, very good trading setup, but it's a little more complicated because there's a lot more data that we have to consider. As you can see that we were in a downtrend primarily for 6 weeks. So it's about a month and a half, starting from the beginning of March until about mid-April. As you can see, we broke through this channel, and this signifies a retracement. Now, this channel was intact for so long. As you can see, this was very, very profitable trading opportunities. Really aggressive traders had a plethora of opportunities for enormous profits. I mean, these swings were just amazing, and they were on point, and as you can see that these levels were respected with extreme precision. So as we broke through to the upside, we're looking for moves to the upside. Now, they're not going to be as defined as a downtrend, because once this channel was broken, actually the rhythm was actually distorted. So we have to understand how the market is going to react once it breaks something like that. But we are in a similar situation as we were with the dollar Swiss. So as you can see, we made 3 tops here. This supply area has been extremely significant. We have 1 test, 2 tests, 3 tests with perfect precision. And on Friday, we finally broke through just a little bit, not too much, but we closed above on a 4-hour chart and then a pullback. So basically, this is telling me that this area is getting weaker and weaker. So more aggressive traders are actually buying right here because we are in the accumulation phase. So they're buying beneath this resistance area. And if you want to do that, you want to make sure you do it as low as possible if you're that aggressive trader. But if you're more conservative, the ideal thing is to break above this resistance first, wait for the pullback, just as we did with the dollar Swiss, and look for the area to target, which is this green line. Why am I targeting this area? Same thing. Demand became supply. It held pretty well, and so logic tells us. Also with the 105.50 area, so we have 3 areas of confluence. Also, we have the 50% retracement area. So we have all these areas lining up perfectly for a perfect profit target. So if we can get in above this area, risk about 25 pips to make 100 pips, that's 4-to-1 reward to risk ratio. And once again, that is a plus EV trade setup. Now, next target, not sure if we'll be able to get there by the end of the week, but if we can get around a 106.50 area, 106.30, that is a pretty good ideal target as well. But once again, I wouldn't want to do anything until we broke this level, pull back and retest this. I mean, you can see it's like a broken record. We're constantly doing the same thing here. So target number 1, 105.50. Target number 2, if we're lucky, 106.50. And if we're extremely lucky, maybe sometime in the near future, maybe next week or so, we can test this area close to 107.50 because the 127 lines up perfectly with the 78% retracement. So all of these areas of confluence actually is going to increase the odds of making profits on our trades. It's going to minimize our risk. It's going to maximize our returns. And these are all the elements that we preach as far as our trade setups. And you would definitely benefit by that. And by doing this, trading actually becomes a lot more clear. You actually can see things develop with extreme precision. Now, you won't be in the markets all the time, but basically you're eliminating all of the noise, and basically you're trading between supply and demand zones, which actually increases your odds for success. So I hope you found these videos informative. This is Gregory for Speaking Forex. Until next time, green trades.